Hello, today is April 13th, 2023, and it's time for some new stock picks. As always, I'm going to review the performance of my picks from this time last year, do a little bit of market analysis, and then give you 3 new stock picks for the 12 months ahead and beyond. So this time last year, I picked Unilever. That was up 24.2% in US dollars, including dividends. British American Tobacco, that was down 11.3%. Cincinnati Financial, down 18%. And LyondellBasell Industries, down 0.4%. The average of those 4 was down 1.4%. which compares to minus 3.9% for the MSCI World Index in US dollars, including dividends, as represented by the URTH ETF. Last 12 months since April 2022 have been very interesting for the markets. Main thing that's happened is short-term rates have gone up a fair bit. That's central banks raising rates in response to higher inflation than they would like it. As a result, valuations for tech stocks have shrunk, and other risk assets, real estate, growth stocks, commodities that were hot this time last year peaked in June or so of 2022, mid-June. Came down, but there's been a little bit of a resurgence in the last few months as the end of the interest rate hike cycle is closer. Bank of Canada has already paused at 4.5%. The Fed may be pausing at the next meeting, or maybe they have one more left before they pause, and the markets are actually now expecting rates to be coming down later this year. The rationale behind that is that the recession is likely later this year in the US and Canada and other kind of Western nations. If that's the base case scenario, the typical response from investors would be kind of abandoning the high beta, riskier stocks like technology and cyclicals, and going to hide in things like utilities and healthcare. However, there's a little bit of an unusual situation with regards to cyclicals in that the energy sector is particularly cheap, and those stocks that would normally will do well in a recession may hold up better than average, or might even be up. We'll see. With that in mind, my picks for the next 12 months are going to be 2 defensive and 1 a little bit speculative. On the defensive side, I'm going to pick Verizon Communications. And the stock is very nicely profitable, generating a return on equity above 25% for the last 10 years. And while that's coming down, it's still very, very nicely profitable. And it trades at a really good valuation of less than 2 times book. Typically, stocks that have return on equity consistently above 20% would trade at 4+ times book value. So this looks particularly cheap. Now, of course, they are so large that their ability to grow is limited, and perhaps that's why the valuation is lower. But still, it's a very nice valuation, and we're getting a very nice dividend of about 6.5 6%. So in what may be a low return year for equities over the next 12 months, if we just collect the dividend, maybe pick up another percent or two or three in terms of a gain, that would not be a bad return to have compared to alternatives. So that's pick number one. And of course, if the valuation becomes more fair, we can have a much larger return from Verizon. So this has good upside potential, and a good dividend. So it'd be a good place to wait until something better happens. The second pick for this time is one that I had this time last year, British American Tobacco. Not much has changed in the business since last year. This is a very mature business. Not much changes. The reason we like this is the valuation. It generates a return of equity of around 9-10%, but it only trades at the price to book value of 0.86 or less than book value. And he pays a dividend of about 7.5%. And in the last 5 years, it's been able to actually grow its book value by 2% per year. You'd think it should be shrinking given the business that they're in. So add the dividend and the book value growth, you're getting close to 9%, 9.5% type return or expected return. Well, historical probably also expected as well. So this is not particularly exciting, not particularly interesting, but has a good chance of delivering a high single-digit return for the next few years. So, and especially going into a recession, if we do go into a recession, that would not be a bad place to hide. Now, the third pick is the gold stock. Gold stocks are volatile, so we have two low beta stocks and one high beta stock. So together, hopefully, they'll make a more interesting portfolio. Gold stocks, I believe, are cheap at the moment. The gold price has gone above 2,000, and it's approaching all-time highs. The reason for that are multiple. Main one being the quantitative easing / money printing that central banks engaged in since COVID. They created something like 30%, 35% of all dollars in existence since the beginning of COVID. So gold going from 1,500 to 2,000, it's just a response to that primarily. Now there's additional reasons why gold price is going up. There's speculation in the market that the BRICS plus nations, Brazil, China, India, Russia, South Africa, and the plus being a whole bunch of different countries now, like Saudi Arabia and a whole bunch of African nations as well. They want to reduce their reliance on the US dollar as a global payment system for things like oil and other commodities. And they may be in the process of creating some kind of a currency that's backed by commodities and or gold. As a result, if that happens, the price of gold will probably have to go significantly higher. And the gold stocks are already cheap based on where gold is. So it sounds like a reasonable speculation to have something in gold equities. There are many places to go for to get the gold equity exposure. You can go to one of the larger cap companies, but my pick is got a little bit more upside possibly if the price of gold stays where it is or goes higher. It's Torex Gold Resources, symbol TXG on the TSX. and it's an intermediate producer of gold and other precious metals. Market cap around 1.9 billion Canadian, and the balance sheet looks reasonable. They earning a reasonable profit with where the gold is, and we think it's a good place to have some money. As always, if you'd like to have a second opinion on your already hopefully well-diversified portfolio and whether these stocks fit in it, or if you have any other questions, please don't hesitate to give us a call. Thank you and have a great day.